Who doesn't want to have their money making money for them, especially when you don't even really have to do much, when you're sleeping, vacation, and doing whatever? That money is just passively accruing and accruing. Stewart had this mindset, and that's exactly why Harvard Grace Capital was started. But he combined that with his love for real estate as well and investing into things, especially in a very particular part of the world. But I'll make you tune into the episode to get that. But he really talked about a host of different things, from what it looks like working with Harvard Grace Capital to some insight that he gave around the real estate industry. Because as we know, everybody's a guru, everybody has an opinion, everybody's an expert, but sometimes it's definitely best to hear it from the source. And I think Stewart will definitely be able to point you in the right direction when it's all said and done. So do me a favor, do not get tongue-tied by this episode, but without further ado, enjoy episode 198, A Passive Passion. What's going on, everybody? Welcome back to another episode of the Down to Business podcast here with Tamar Turner. Look, I hope that a lot of y'all are tapping into this episode today. One, ready to learn something, maybe ready to build a portfolio, maybe ready to make some money, maybe even ready to learn about what you're doing in this particular space or in this particular industry, but what you could be doing maybe differently, or room for improvement, or even just learning from a true expert in the field, somebody who is well-versed and somebody who is here to kind of, one, just tell you about the different hats that he's worn and just different experiences that he's had, but ultimately how this can be a benefit to you and moving forward, and how this could only do you some good. So obviously, for my people out there, everything that we touch on the podcast in some form, in some fashion, is helpful to others. But I really like this particular industry and this particular niche because I'm very curious about it. So maybe that's a little bit selfish thinking, but look, I'm trying to propel. I'm trying to make some money just the same too. So if nobody out there else is listening, Stewart knows that I'm listening for sure. So before we get into all things, before he brings us all up to speed, one, Stewart, how you doing today? How's everything on your
I'm
end?
doing great, Tamar. Really appreciate you having me on the show.
Absolutely. Thank you for joining us. I appreciate it. I tried to block that siren out. I don't think I did the best job of it. But all right. So for everybody out there, look, Stewart, I know we're going to have some people from your end. I know we're going to have some people from my end, but I also know that we're going to have some newcomers along the way, some people finding out about both of us for the very first time. So can you just do two things for me? Can you, one, just tell me a little bit about yourself? And then can you, two, just tell me what brings you on the Down to Business podcast today?
Great. Well, I said my name is Stewart Heath. I'm a CPA. I've been a practicing CPA for nearly 37 years now. It'll be 37 years next month, which makes me really old. And I've gotten to see a lot of different ways that people make money in my career, and some of them are fascinating. And the one that I think it appealed the most to me, and probably the one that's most accessible to everyone out there, is probably investing in real estate. And so, as I wound down my general practice in 2010, I took a couple of executive jobs at an industry, and then I never got away from real estate, in that I always observed how some of my clients did it. And then after the corporate jobs wound down, I ended up having to put myself in the first round of a layoff on my last gig that I had. I wanted to start a private equity real estate firm, which we did, Harvard Grace Capital. And to do that, I've just sort of become an evangelist for investing in cash flowing assets. And so that's why I'm on the podcast today, to talk about that and offer myself to anybody who wants to talk about that.
Well, just in that alone, I appreciate that, because there are a lot of times, and even I'll speak really more so about myself with this, where I want to get involved in certain things. I want to learn more about certain things, and I want to even benefit from certain things, really put my best foot forward and do it. But oftentimes, once you get to Googling or YouTube University, or just searching or talking, there can just be an array of information coming at you, an array of misinformation coming at you, an array of just different opinions and experiences. So oftentimes that just abundance can be overwhelming, and it can really just be hard to find a starting point to really hone in or narrow in, or you go so hard on something. I know I'm speaking to some people out there, you've watched a video or you've heard something, or you've maybe even talked to a friend or family member and felt so motivated about something, hit the ground running, and then ultimately it just stops one day, or maybe you miss one day and maybe that day becomes weeks and then weeks become months. And the next thing you know is collecting dust somewhere. So I love the fact that I love when I can talk to different people, but they have their different experiences, they have their different positions in what they do, but they can just, step down and still offer themselves, because I think it's nothing better than just being able to hear from the source, hearing from somebody who can been there and done that, who can make those mistakes so that you don't have to, So thank you for that, just the same.
I'm
Now,
happy to share all of my mistakes.
look, we love even transparency that much more, and happy
Absolutely.
to you as well too. That's amazing. 37 years, that's definitely no small feat. So I could imagine that there was a host of different things along that journey. So
Yeah.
now with I guess I'll start at the CPA. With being a CPA specifically, was that always just the goal at top of mind? Was that always just something that you wanted to do? Did you kind of discover that just along the journey and along just kind of working and wanting to become a business owner, wanting to kind of brand yourself? What really allowed you to step foot into that position, and really almost 37 years later now?
I became a CPA because my dad was a CPA, and I thought, okay, I'll do that. I enjoyed a bookkeeping class in high school, and therefore majored in accounting in college and stuff like that. 2 or 3 years into it, and I'm slinging tax returns, and we're doing some financial statement audits, and the learning is fascinating. I think a public accounting education is a fascinating way to start one's career, just from the sheer vastness of what you get exposed to and what you see. But I realized fairly quickly that I'm a whole lot more entrepreneurial than your average CPA. Um, my dad he worked for one company his entire career, from college to retirement, and that is not me. So I guess I take after my mother, who is somewhat entrepreneurial, creative ideas, and my dad was just steady Eddie. Um, and so started a career with Price Waterhouse, and then, to be honest with everyone involved, I went out. I didn't want to try to be entrepreneurial on somebody else's dime, so I started my own firm, picked up a few bookkeeping clients, all the while trying uh, to start things on the side. I've had an employee leasing company, a fish importation company, a medical billing company, and probably some I can't even remember along the way. So, but it was observing my clients who were doing real estate, all different forms of real estate. Um, Along the way, in watching them work their get rich slow plan, and that's what real estate is. It's you're not going to get rich fast in real estate, unless maybe you strike oil or find a gold mine, or these days a lithium deposit on some of your real estate. So, but it is it's an asset class that's just very stable in most cases, and if you work it correctly, over time you're going to make some pretty good bucks.
And really, what's cool to hear about that latter part of the answer was that you knew almost kind of going in that it was more than what meets the eye, in a sense. Like, I think a lot of times what we come across these days, especially since coming on the other side of the pandemic, is a lot of these get rich quick things, or a lot of these quick turnarounds, and people just want to, go to sleep with 60 cents and then wake up with 60,000, and I feel like it's really so much more to that. But
Yeah.
I love that. But I also think that why we kind of get those connotations, why we get those like stigmas around it, is because of how it's promoted. Is because social media can be a dangerous game nowadays, and word of mouth even, in a sense. But social media, man, you see all the glitz, all the glamour, all the shiny, flashy different things, and you don't know really what's going on behind the scenes. You don't know if people are just using things as props, lighting, fake backgrounds, everything of the sort. But all you hear is just, hey, I was able to do this, get that, all of this and everything like that. They're essentially somewhere where you want to be. And so initially you really just start to do that comparison, which is the thief of joy. It's one of my favorite things. But it's just like, you look at something, you look at someone who may be where you are, and you paint a false picture. You give yourself false hope, in a sense, because it's not
Right.
what it was. That 2-minute video that you watched Who knows what they had to do? Who knows when that video is over? Who knows when you close that phone or lock that phone? What's going on in that person's life or in that person's world? So I think the perspective that you had going in, knowing that things were just going to be a little bit slower, knowing that, hey, I'm not about to come in with $1 and turn it into 1 million just at the snap of a finger. I think that that's important. I think that that's
Yeah.
cool. And even more so, it really goes to show that this was something that you truly wanted to dedicate yourself to. Because how many people are willingly throwing themselves into something that they know is just not going to return as quick as they may want to, unless it's really just something that you like or that you want to do. So I say all of that to also ask too, as you delve into real estate, was there a particular area or was there a particular form of it that interested you the most? Because as I was speaking to in the intro before I revealed what we were talking about, I talked to a host of different people in real estate, from people doing their own boots on the ground program, to people land flipping, to people Airbnb, to people building from the ground up. So was there a particular facet that, just caught your eye and something that you really just wanted to do?
Well, when I was younger, I still held out hope for the get rich quick um, possibilities of things, and I was very taken with real estate development. Being an entrepreneur, I'm always looking for a way to express my creativity and things like that, and that's what real estate development really is you know art with the land, if you would, and it is fascinating to me, but to do it right, as in everything in life, you got to put a lot of years of experience and know what you can do and what you can't do, and so I made some mistakes along the way with that, but that's what really fascinated me, and then in my later years, yeah, I just finally realized, to go out and do the fun things, what you really need is a foundation, that a platform, if you would, and that platform, in this context, is a portfolio of cash flowing assets, that mailbox money, if you would, assets that will throw off cash without a whole lot of work. A whole lot of work went into them on the front end. I'm not saying it's easy, but once you've done that and you've booked the 10-year lease, or whatever, then you have time and you have a platform, and to go out and chase the IPO, if you would, or chase a development, or a value add multifamily project or something like that. In business terms, finance terms, you have the platform for which you can go pursue the riskier things, and the more risk, the more reward is true, but it's also more risk, you know, and it's more likely that something is not going to go right. Um, and doesn't mean it's insurmountable, but it's something you'll have to pivot on, and you'll have to have some experience from which to know how to pivot. So I was very interested in development, and I even had a contractor's license, and built several homes. And then, being an accountant, I realized after about 30 houses, I'm making about $20 an hour here, and I was just sort of GCing it, and we were building in a sort of a starter home class, and if you're going to make any real money there, you need to be doing 200 of them, not 30. And so I was able to stop that, but you know, and I still love developments. I like thinking about it and talking about it. We don't do any right now because our whole focus is bringing cash flowing investments to investors on a passive basis, and so that you get cash flow from day one, and that's what we do. I hope to do some more development someday, but it'll have to be the right situation. And so anyway, that's where I am after my lessons learned, kind of a thing. So.
And I like that you spoke on passively, because I feel like that's also something that people don't think about, that essentially this can be something that is making you money when you're not necessarily devoting time and effort into it. And I like that perspective of it. But okay, so before we touch a little bit further into the passive side of things, and really why that's important and what the benefits could be from that. I want to also talk about your entry into it, and really, just like you said, recognizing it from an art perspective. I love that description. I think that's pretty cool. Like, that's creative. I've never heard anybody reference that, so I like that. But okay, so when you came in, obviously there may have been some things that you knew, some people that you talked to, some things that you did research on, heard about, everything like that. But do you feel like there was a set of like rules or guidelines or anything that you like, a playbook or like a blueprint that you need to follow when it comes to real estate? Like, is there just things that people should know? Is there things that when it comes to investing that, hey, they're pretty much like do's and don'ts?
I think there are do's and don'ts. I can give you two or three, and I've heard other people say these. Most of these are not original to me, but I have learned usually the hard way, that these rules do apply. And the first thing is all real estate is local. And when I mean local, I mean hyper local, like a 3 to 5 mile radius around whatever property that you're looking at. Um, and I'd heard people say that my entire life, but I didn't really understand it until. Um, and you've brought up the pandemic, and here's a perfect example. If you recall, 4 years ago, even this 4 years ago this month, office and retail assets were completely dead. The media had declared them dead. They're just worthless. Just go. And I'm sitting in a building that we bought in 2021. It was full. For years before the pandemic, it was full. Throughout the pandemic, it was full. After the pandemic, it's still full today. And were there no offices in Tennessee that were having trouble? Of course there were. And they're in the same places that they are right now. And they're in central business districts all over the country. This building we bought is what I call a suburban office building. So we're about 30 miles outside of the Nashville city center. And there's not an office building to be had within a 10-mile radius of this building. And I wish I had 3 more just like it, and so that's what I mean. It's local. What is the competitive advantage of the piece of real estate you're looking at versus, everything else around it? What are the vehicles per day and that kind of stuff? Am I tracking? Does that make some sense there? So,
Absolutely.
Yeah, that's my rule number 1. And my rule number 2 is, and having violated this rule many times, that you make your money on the buy, not the sell. If you buy, and this goes for stocks too, if you overpay on the front end, you have eternally damaged your return on investment. You might actually make money on the deal if you wait long enough, or if you're just lucky, but you will never have made enough money. It made as much money, rather, as you would had you bought it right to begin with. And that's another thing that generally takes some experience, and it means a lot of times it means you have to be willing to walk away from an asset that you perhaps have fallen in love with, and because things happen, tenants leave, things like the danger of overpaying, and there was an awful lot of that going on during 20 and 22 and even parts of 23, where you saw multifamily buildings selling for 3.5% cap rates, which is just insane. I mean, there's no way you're ever going to make any money, but deals happened. And I don't blame the sellers for asking. I think some of the investment firms who were buying at that price might have been fee driven and not long-term driven. So.
And the reason why I asked that too is because I also do just want people to realize that it's important to just not go into this blindly, in a sense, or not take a lot of what you have just heard or what you have done or what you have seen or what you have researched. But sometimes you really have to get that boots on the ground experience yourself. You really have to get that real world, that real life. Like you said, even having that rule now, you can also say in the same breath, it was something that you violated. A lot of times
Oh yeah,
learn
yeah.
and really had to go through an experience and process. So I get that for sure. So thank you for giving us a deeper look into that. Now, passively now, when we think about entrepreneurs, I feel like entrepreneurs are always looking to add something to their belt. We just never get
Mhm.
tired of having too much on our plate. We just love the adrenaline rush that comes with it. Now, so from a real estate perspective, though, why do you feel like entrepreneurs should be queuing in, on investing in real estate? Why do you feel like this could be of such a great passive benefit to them?
Well, for one, I think real estate is uh, one of the greatest investments of all time. It's the original asset class, and I always get my dander up when Wall Street puts us over as calls us alternative. So, no, 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 no. We're not over there with art and crypto and stuff like that. But but real estate has by far and is by far the most stable asset class of all time. Um, and so that's one reason, and I tell entrepreneurs, outside of their own companies, which is where 98% of their net worth is probably, located, is in their own company that they've started, unless they're really successful and have exited a company already by selling it, whatever. Um, that's where all their risk is over there in their company. So start peeling off 50 or $100,000 passively and start building wealth over on the real estate side. They don't have to know anything. They don't have to be experts on it. They do need to be experts in judging of character, and because you do have to evaluate your investment sponsor, whether or not you're doing the investment itself, and so that's diversification. Number one, that starts helping them build wealth outside of their main entrepreneurial venture. There's tax benefits that can help offset some of the gains that they're making in their other ventures. There's just several different types of tax benefits. You get the benefit of professional management, which any entrepreneur should appreciate, being professionally managing their own company. And so, real estate should be managed by a professional. And in many cases, I'm not saying people shouldn't manage their own rental properties, which they can do, and things of that nature. But if you're going to be into bigger assets, you want real pros managing that. So very much like you would put money with a money manager, which is a professional manager of stocks, bonds, those type things. You want to invest in real estate assets that are being professionally managed and overseen with a business plan. But we do not buy properties without a plan for that property and a plan to exit it, and a plan to grow the net operating income, and a plan to pull cash out on a tax-free basis, and so forth and so on. So those are the reasons I think entrepreneurs should be looking at real estate as an option.
And I'm not here to argue with you either. I'm here to just agree, and I'm here to say that that those are just some great things, because I feel like it takes the principles that we were already abiding by ourselves, or things that we expect and that we want within our own business. So why would we not want this from somewhere
Right.
else, especially if it's going to be a benefit to us? Okay, so towards the end of that answer as well too, you brought up just taxes, and so that also makes me think about just like interest and rates and different things like that, and how a lot of times people can tend to shy away from numbers, from percentages, from just different things like that, and what the market is. And if you watch the news and they say, hey, that the housing market is terrible right now, then you, as someone who doesn't really know too much and who is not in the market, may say, all right, well, this is just not my time. If they say it's terrible, it's terrible. Let me take a step back. But it wasn't until I asked some real estate investors that, they said, one guy in particular, Brian Grimes, he said the market is always good. The market is always bad. It's about your outlook on it. And to me, I was just like, wow, like, that's to one man's trash is another man's treasure, almost, in a sense too. So why do you feel like when it comes to numbers, when it comes to rates and different things like that, people just shouldn't be worried about it? Or what do you feel like the outlook should be when it comes to numbers, when it comes to rates? Should people panic? Should people fear? Should people be playing the waiting game? Should people be listening to what they're seeing? What can people do, I guess, to educate themselves in some form or fashion? But when just looking at rates in general, how should people feel?
It's a good question. I always go back to rule number one: all real estate is local. And so there are parts of the country where the housing market sucks. Um, in most of your southern markets, which is all that I follow, I don't follow New York, Chicago, or any of that kind of stuff. Um, the housing markets are still very hot. Are they as hot as they were in 2020 and 2021? No, but thank God. I mean, because prices were just going up incredibly too fast to sustain itself. Values have not declined. Give me a market that's going to increase 5% every year and without any big bumps, and I'll take that all day. Um, so how do you look at it? Well, you look at the locality of the market, and as far as interest rates go, and one of the things that I love about real estate is its numbers. I'm a CPA. I'm a numbers geek. Numbers speak to me, and that's my love language, so to speak. But the real estate math is actually fairly simple. I'm not developing software here, and would never have the aptitude to do that. But real estate math and doing what we do, which is buying stabilized cash flowing properties. I almost don't care what interest rates are, because I'm going to back into the purchase price based upon what my borrowing rate is today. And I'm going to look at the seller's net operating income, because they've already got the property to where they want to be. And so that's what I'm buying, is that net operating income. And then I'm going to back into what purchase price I can afford to pay based upon today's interest rates. So, you can say, I don't really care what the interest rate is. But then of course the seller wants one thing and I want to pay a different thing. And 2024 has been a year of great coming together. We had very few deals that we could find to do last year, because all the sellers wanted 2022 prices when interest rates were up 5.5%, and almost like somebody fired a gun January 1st this year. All the sellers, it's a much more realistic market, and so we've already underwritten probably 100 more deals than we ever got to look at last year, and so and we're all doing it based upon today's real interest rates, which is great, because if my property works at 8.5%, it's going to be golden 2 years from now when hopefully it's 6.5%. And we'll refi and do what we do. So.
I like it. I like it a lot too. And I could even see, in some cases why real estate could even be something that people look to versus stocks, versus bonds, versus crypto, versus different things like that. Just for sometimes even too, that, as you spoke about, that stability and just knowing. And I also think too, because it's such a populist, but it's versatile. Oftentimes, we hear about, or we're involved in certain things that are populist, but it's not many ways that you can go and you can pivot once you're in it. So you kind of feel like landlocked or like trapped in a sense. But real estate, I feel like, you can be on I was mind blown when I talked to a guy that was investing in properties, and he said he never stepped foot or saw a single one of them. And I was just like, to me, like, wow, that's just crazy. But it also goes to show you just how it can be. That local rule number one, like you said. So that was really just cool to me. So now, all right, I'm thinking about your point about office buildings, office space. And I also think about being in an office building during the pandemic. I think about being an essential worker, and just even the contrast of when I was in Pennsylvania versus Florida, and how in Pennsylvania we were on a curfew. I had to carry a note around. I had to do everything like that. And then I get to Florida, And it was just like they had bigger fish to fry. It was kind of wide open. Everybody's just they're looking at you funny if you're protecting yourself or wearing a mask or doing
Right.
that. So, but naturally with that, as the office buildings, as I just look at different downtowns and different areas, it was almost like a ghost town. It felt like people were either laid off, working remote, going hybrid, just not coming to work or anything like that. So it felt like the need for office space was really diminishing, was really just not there. It wasn't just, but even now hearing, but even as it, and I would say even as time kind of went, it kept feeling like that. Like, now I feel like everybody is just so spoiled that nobody wants to apply for a job if it says in office, almost like nobody wants to write a cover letter. You know what I'm saying? So it's crazy. But I think about too, for as many people that hold that sentiment, there are also a whole lot of people that like the traditional style setup. Can't really, we started to hear the problem of people home didn't feel like home anymore. Or it was hard to differentiate that balance when you clock out, or it was you seeing the people not at work, but the screen is on and everything like that. So for what you guys are doing over at Harvard Grace, are office buildings important? Why would you, if you had the opportunity to, why would you own more? Why do you own one right now?
Well, I own 3.
Better.
Yeah. Again, it all goes back to the specific building and the specific set. Going back to another comment you made a minute ago, people are hearing all this stuff. Don't ever get your investment advice from the national news media, not even one of the business channels, because they overgeneralize everything. So, case in point, office buildings are dead, and if you hear them today, there's a story at least once a day on most of those networks that the trouble in the commercial real estate market. Really? All of it? I mean, we're all physical beings, and we all have to exist in some of these properties, and even to the extent that the office market is troubled. Okay, for starters, the office is made up of at least 6 different subcategories. Let's take the easiest one, medical office. Okay, there's no trouble there. Your doctor is not going remote, and he's certainly not coming to see you. So he's got to have a big, expensive lease that he puts hundreds of thousands of tenant finished dollars in there, where he can put his MRI and his ultrasound machines and stuff like that. And so he's a customer-facing business, and they got to have office space. Okay, which is exactly what our first deal is, which is this building that I'm in right now. That's where we differentiate. Are the tenants customer facing? So we got mortgage companies and insurance agents and dentists and other people who don't want to leave their little suburb to have an office space where they see customers and whatnot. And there's thousands of those all around the country. So now that takes care of medical office and suburban office, which some people will call service retail. And then you've got specialty office. One of the markets that I cover, that I'm in nearly every day, is Huntsville, Alabama. It's sort of the home of the defense contracting industry in the United States. And they're all doing top secret stuff, and they can't talk to you about what they do at work. To the point that even during the pandemic, they were exempted, because a lot of those contractors and those employees, they were required to do their work inside what's called a SCIF. And I never can remember what that acronym, but it's a sort of an electronic blackout zone that nearly every office building in Huntsville has. And so they go in there, they do their work. There's no cell phones allowed in there. And so are any of those office buildings having trouble right now? Not even one. Okay, so again, everything's local. And so that's my thing on office. The ones that are having trouble are central business district and otherwise Class A buildings, which are the nice buildings that employers used to rent out all the space. It had their marble countertops in the bathrooms and stuff like that, and their employees would come and work together. and they don't see their customers there. So that's the difference. And the employees don't want to go back there. A lot of them want to stay home. I think what you're going to see is the hybrid work model is here to stay. And the real good news for office space is that the hybrid work model really doesn't reduce all that much real estate. If everybody's still going to have offices and whatnot. Some of it will for some people. So there'll be some consolidation and trimming back, but they're still going to have offices and people are still going to work from home because, that's who we are as Americans. We want all of our options. So
we definitely want to exhaust all of our resources by any means necessary.
exactly. Yeah.
You made a great point about that customer facing and how I didn't even really start to draw the connection about how certain people, like an office is like make or break. Like, if these, like, for instance, if my doctor was to go remote, I'd be getting a new doctor. I'd be raising some eyebrows because it's just like, hold on, we can't be, you can't take blood pressure and heartbeat and ear checks and we can't do that through a camera. So I get that. I understand that for sure. And now that I hear you even say that now, I think about the cities, the places, even maybe the industries that were struggling the most. And I think about what they did. And I think about ultimately how it wasn't necessarily customer facing, or it could be something where you do kind of your things on the own, or you take a different approach, or you just completely, because there were a lot of layoffs within the pandemic too.
Mm-hmm.
A lot of people just went out of business completely. So that was also another thing to account for.
And even that was local.
Right.
That was heavily local, based upon local city and state policies and how hard they enforced COVID restrictions.
For sure. Yeah, because we saw it a lot. Like I said, when I was being in Pennsylvania, Philadelphia specifically, it was tough. Like I had to, getting off work, I had to carry a note saying that if I was stopped on my way home, that, hey, I'm just getting off work. I'm an essential worker and everything. Like, so it was like it was what I was used to, that lively, just that hustle and bustle. It was ghost towns. It was gates everywhere, things boarded up, things just completely just, what I said. But as I spoke to, I came down to Tampa. I was like, wow, I was blown away. I said, wow, this is like, these are happening on the same coast, just hours apart from each other. And it's just crazy how, like you said, locally it gives you a totally different perspective, a totally different.
Most of us in the South sort of acted like there was no pandemic from about June 2020 forward. So,
right.
It was just, we were just wide open. Florida, I think, was first, and Georgia was pretty close behind them. And
close second, I was about to say, yeah.
Now, Tennessee and Alabama followed pretty close. So
the South, man, y'all it's different down here, but I love it. I'm grateful for you. See where I'm at now. So
yeah, Tampa's a great market.
Amazing.
We got
to see a lot of the growth and stuff that have happened since I've even been here. Now to see it kind of go through the pandemic and now on the out of it, it's cool. It's really cool to see. Really, really cool to see. Speaking of growth, though, from coming in as Harvard Grace Corp to now being Harvard Grace Capital, I understand that, with the company making changes, there are also things that you guys are doing on the back end that people just don't see. That obviously with any business owner, with any entrepreneur, you have to adapt and adjust. Things just can't stay the same. You have to make new. Obviously you keep your foundation, you keep your core principles, you're missing your vision, but you fine tune things, you improve how you can, you take feedback, you get all of that. Now, I also think about the people who know nothing about Harvard Grace, have never come across you guys, have never heard of you guys, but maybe this episode, maybe some social media, maybe a website, maybe word of mouth. At some point, they're going to come across you guys as some form of fashion. And I think about those people who come across you, whether it be listening to this episode, and they're curious now. They have questions, they want to find out. They've been looking to invest in real estate for the longest. And after hearing this episode, after hearing you speak and some of the points that you made, they're like, wow, this may be it. This guy just answered everything that I need. What can people expect when it comes to working with Harvard Grace Capital? Can people just expect, is this like a consultation based approach? Is just you guys educating? Is this you guys hit the ground running? Does it really just depend upon the said person and really just their dedication and commitment as well? But I'm always just interested to hear the personal touch. One reason being because you really showed it at the beginning of the episode when you offered yourself as a resource to everyone, people who may not even know you, but you have no problem answering questions. You have no problem pointing people in the right direction, giving some gems, giving some benefits as you've done throughout the entirety of this episode. So what can they expect from working with the brand?
My approach really comes with how I practiced as a CPA for all the years. And so it's all very individualized and customized. Not necessarily the investment itself, but, we build a relationship. We're very patient about it, and we're not just interested in whatever deal we're working on today. We hope that you'll take part in many deals, as most of our investors have. And so, you know, as I say, it's very one-on-one. And I do invite anybody and everybody to book some time with me. I got 3 calls later this week with people who have heard me on other podcasts, and mainly I just like meeting new people and talking about real estate. But and you never know where that will go. There are people that I've talked to like that, over a period of years, and then 4 years into it, they invest something in one of our deals. I talked a guy out of $100,000 investment on one of our deals last fall, because he was wanting to do it and his wife didn't, and I'm just like, dude, it ain't worth making your wife mad at you. I said, this is not the end of the world, and I said, you talk to her, and I said, the next time I'm in Florida, let's all go out to dinner. I'll talk to your wife too. And we haven't gotten that done yet, but I do get down to Florida a couple of times a year. I mean, it's just got to be the right thing for everybody involved. Obviously, we have some investors who, 50 or 100K is nothing to them, and they write the check and forget that they did it, and I'm not kidding. One guy called me up in March and said, "Hey, I just got $15,000 distribution from you. What's that for?" Completely forgot that he'd invested in one of our deals, and and then there are people that are investing out of their IRAs, and every penny is super serious to them, as it should be. So there is no high pressure. There is no. It's a relationship to us, as the SEC would like it to be when you're doing private placement deals. It's supposed to be a relationship. There are other firms that they try to do it like a deal meal, but at most we're only going to do about 4 deals a year. So rarely you're going to see us working on more than one deal at a time. So to do the cash flowing deals, you have to kiss a lot of frogs before they turn into a prince. But anyway, so that's what they should be able to expect, is a relationship with me, with the other people on our team, and you got a question about a deal, you email me directly or you call me directly, and all of our investors have my cell phone number. It's just not a big deal.
And that's important. That's important to me, just that personable approach, just being able, it's only but so much you can do with a chat box, with an agent, with just the back and forth and all of that automation and things like that. Sometimes you really just need a real person to understand, to just be able to even hear your explanation, because sometimes you try to give something to these voice messages or different things like that and they can't hear you. It's not one of the options or anything like that. But if I have somebody that I know I can email to, and I know I'm getting a human response, or I know that I can call you right away and get different things like that, that just makes the comfort that much more. And it also makes me engage more, because I think too, a lot of times with our journeys and just with wanting to try new things, it can just turn you off if the customer service is not there, if the website is not compatible, if the experience just as a whole is just not conducive to what you're used to, and especially if you're a business owner yourself. I can't tell you how many times I've just not wanted to continue relationships or even build a relationship because of just how the business was run or the professionalism behind it or lack thereof. So I love the fact that with Harvard Grace, people will be able to put faces to names, faces to websites, faces to experiences and voices and everything. And I encourage people out there who are listening, whether you're tapped into real estate, whether you're interested in real estate, or whether you just may have some curiosity from the episode, to just tap in. It's not often that we get these people who just want to make themselves available. But I say, while they do, continue to take advantage while you can. So before we expound on the availability and tell people where they can get to, where they can find you and everything of the sort, do you feel like there is anything that we have not touched on today that you want to leave the people with, whether it be anything that Harvard Grace has coming up, like a future outlook, anything you guys are excited for, whether it even be any last words that you want to leave for business owners, entrepreneurs, other investors out there, or just anything in general?
I would just say, our general approach to attracting relationships is an educational approach. Um, we do multiple different series of both social and then one-offs, and you can find those on our website or in our YouTube channel. And it is all intended to be free, of course, and informational about how we approach things, um, and just about what we think true investing really is. And true investing is not what's generally talked about on your average CNBC broadcast. I mean, what they're talking about is more trading than investing. You can invest in stocks, and there are some people who are awfully good at it. But true investing is something that you do over time, and we try to educate about that. And then, as I've already said, the importance of first building a the foundation of your portfolio from cash flowing investments, which can be dividend paying stocks. But those are going to be a lot more volatile than cash flowing real estate. Anything that's throwing off cash is going to be more stable than something that's not. I mean, Apple, one of the largest corporations in the world, does not pay dividends, although they could. And their stock is completely volatile. It's gone from, I think, a low of 167 this year to 215, just on their AI announcement last week. And that's pretty volatile, especially if you bought at 200. And it was at 167 at one point. Real estate doesn't do that, especially stabilized cash flowing real estate. So anyway, maybe more than you wanted to know, but we do have an awful lot of resources meant to help people understand what we're trying to do. So.
Trust me, you'll never give me more than what I've asked for, because I just love that people are making themselves available. People are willing to answer questions, are willing to give that education where elsewhere you might not find it, or elsewhere it might be thousands and thousands of dollars for these courses, or just these different experts or these gurus and different things like that, who at the end of the day don't always have the best interest of their customers, of their community in mind. And with Harvard Grace, I understand that you guys understand that you're fostering a community, that you're bringing people under your wing at different arrays in the real estate journey. People who may have a little bit of experience, may have none at all, may be pretty comfortable with it, and may just kind of, like you said, I want to have the problem of the person who didn't know where his distribution money was coming from, and I want to just that's those are the type of problems that I hope to have.
Yeah. So, that's what I want to be when I grow up too. So
I definitely do understand and appreciate that just the same. Now, before we officially wrap up, the call to action, the most important part, is people finding you now, people tapping in, people taking advantage of your network and the services and everything that you're offering. So everything out there, from social media to the website, what are the best places to reach you? If people just have questions, if they heard the episode, want to get in contact you with anyway, just give us everything you got.
Yeah. The easiest way to get everything that we got is harvardgrace.com. You can poke around, find resources, and one of my favorites is questions you should be asking your passive activity sponsor. So that's in there. There's 5 reasons entrepreneurs should be investing passively in real estate. That's out there. But you can also, under our team, you can find my Calendly link and book time with me directly. We're not hiding from anybody. And as I said, I'll talk to anybody anytime. So we are on social media. We're pretty active on YouTube. We do a lot of videos. Generally, they're 3 to 4 minutes long, sometimes even shorter. And again, educational type resources. And then occasionally you get a straight opinion piece from me. So, and it's worth what you paid for it. So, but anyway, check us out. We're on Facebook, LinkedIn primarily, and then YouTube. So.
Perfect. So I definitely am hoping that people are tapping in, because I know I'm tapping in. Like I said, a lot of these times I'm thinking I'm having my own curiosities and everything like that. But a lot of times this is just information that needs to be heard, that needs to be put out there, that otherwise may have been assumed or unaccounted for, or just untold or unknown. So Stewart, from me to you, just thank you for just hopping on here, sharing the platform.
Thank you for having me.
space. Oh, absolutely. But also too, thank you that for everything that you're doing from the Harvard Grace perspective, and for all the work that you guys have done, for the impact that you're making, but for the impact that you'll continue to make. Now me finding out about you guys at this point in the journey, I'm excited for it. I'm excited because I know that there has been a plethora of work and groundwork and foundation laid beforehand, but I know that the aftermath is just going to be that much more bountiful and abundant. So very excited to just continue this journey with you guys. And obviously, if there's anything that we can do from the podcast perspective to support, never hesitate to let us know. And to everybody out there who continuously taps in with us, comes to the events, shows love, apply for the grant, whatever you may do, whatever form or fashion you've interacted with Down to Business, I thank you. I love you. This has been another episode of the Down to Business podcast, here with Tamar Turner.